Really important subject here. Let me turn specifically to the U.S. economy now, because the U.S. economy gets impacted by all of this, of course. One of the big catalysts for growth in the U.S., certainly over the last 2 years, has been the administration's tax cut plan. We saw 4.2% growth in the second quarter, 3.5% growth in the third quarter. We're talking about maybe 3%, maybe a little lower in the fourth quarter. What is your assessment there? Because here, politics gets involved. We just heard a new proposal from Alexandria Ocasio-Cortez to tax the top rate after $10 million at 70%. How is all of this going to impact the economy and markets in the U.S.?
Yeah, there are so many levels I can deal with that. The first, I suppose, is it creates a hump in growth. That stimulation. When there was a limited amount of capacity, it created the stimulation that you're referring to. It also creates larger budget deficits, so that has to be sold in bonds. That hump passes through the economy, then you'll get a slowing, and that's what that's going to look like. But more fundamentally, I think, we're talking about the political, social polarity, the wealth gap, and the like. So I think that the wealth gap and the opportunity gap is the biggest issue of our time. I think that is the political issue. And with the politics becomes the economic policy. Do you have one type of policy or do you have another policy? This is very much like the late 1930s in terms of populism. It can be more of the populism of the left and more of the populism of the right. I think, I hope that there would be a national initiative to deal with those issues. I think that there's a question, justifiable question, of whether capitalism is working adequately for the majority of people. I think that there needs to be reformation. But when you're taking then income taxes, yes, there should be, there needs to be a redistribution, but there needs to be a redistribution of opportunity. When you see what's going on in schools, or school systems that don't have enough money to have adequate amount of books, and you deal with the population different. It is I think, the predominant issue of our time. And so when you go to a 70% marginal tax rate, that's going to have enormous implications. That implications, by the way, something like 56, the last survey I saw, 56% of Americans are in favor of that. 56% of Americans on the last survey are in favor of a 70% marginal tax rate above $10 million. That changes the nature of the economics in the same sort of way, and probably even in a bigger way, that the tax cuts changed. And so as we come into the election cycle and so on, and those issues are going to play, they're going to play a greater role in terms of the capital markets. If you look at the behavior of capital markets based on whether it's capital friendly or an environment that's not capital friendly, you could see how the capital flows move and change the marketplace. So these issues will be an important issue. What concerns me the most is the polarity and the anger behind all of that. I think the country would do better to have a party of the middle and try to bring people together in terms of trying to find this in a common way. But I think we can expect much greater polarity, and with that, I think that'll be a market-driving influence as we're moving ahead.
I couldn't agree more. I mean, most people are hanging out in the middle, by the way. You might lean toward the right toward some issues and lean toward the left on the other issues. But you make such an important point in terms of the impact of this. For example, the other day, Mayor de Blasio said, there's a lot of money in this city. It's in the wrong hands. Now, you've given an enormous amount of money away. Stephen Schwarzman has given an enormous amount of money away. You know, $100 million was just given by Ken Langone to NYU to give free medical school to students.
It's a drop in the bucket.
Does that change?
No, it's a drop in the bucket.
I mean, if you look at 70% tax rates,
if you look at what it really means. Like I broke the economy. It's on LinkedIn if anybody wants to go. I broke the economy into two pieces, the bottom 60% and the top 40%, because I wanted to see the parts differently. And when you look at the conditions of the bottom 40%, things like the amount of money that's spent on education, if you're in the top 40%, and by the way, it's the top 40%, it's really like the top 5%. The amount of money that is spent on education per child is 4 times what it's spent in the bottom 60% of the economy. So you think about how you're going to educate. Do we create something that approaches an equal education? Do we create something that is approaching that element? We don't create a bottom, I don't believe. And because that polarity is taking place with such a large percentage of the population. Also, look, I'm a capitalist. But at the same time, when we have technologies being wonderful technologies that work in ways to save labor and reduce labor and change the nature of the market, and that's not properly dealt with in terms of that creating opportunity. I think our society does not look at the total cost of things like education. Let's include the social cost. Do you know that, for example, if a child completes high school education, not completing or not completing, and that child's lifetime is estimated to be about $1 million in the cost effectiveness. The cost of putting people who don't get trained often go on the streets. State of Connecticut, very interesting, one of the richest states in the country. 22% of the students, high school students, are either disengaged or disconnected. Disengaged means that they go to school but they don't study much. Disconnected means they don't know where they are. The issues of this become large issues. And I think that because it doesn't work well in terms of that is a basic issue. And the real question is that going to be a battle between different segments, and will prudent moves take place? If you go to a 70% marginal tax break on that, and you don't handle that correctly, it changes capital flows, it changes the nature of things in a profound way. So I think that if we were to take economic policies, the slowing effects and such things, and we were to take a 2-year time horizon between now and the next presidential election, and you think about what weakness might be, and you think about how this issue is, I think that this issue is going to be the issue of our time.